morning, and thank you for joining the New Normal Retail Market Data Trends for Q2 and Beyond with Jade Huang, VP of Pricing at Centric Software. As a reminder, if you have any questions during the conversation, to please use the Q&A function at the bottom of your screen. Now, here's your host, Winnick, Senior Analyst at Coresight Research.
Hi, everyone. Good morning. Thank you all for joining. Jade, thank you so much for being here. We're very excited. We're very excited to have you and discuss the new normal retail market data trends for Q2 and beyond. We have a lot of content prepared for today. So without further ado, let's jump in. So just to start, give you guys a second to slowly come into the webinar, give you an overview of what we're expecting to hear today. Some of the key trends that Jade and the Coresight team have picked out for this conversation include discussing inflation and discount levels from last season, understanding what the numbers are telling us and how to use this information to take action or better prepare your Q3 and Q4. We're going to discuss top performing categories across apparel, footwear, and others, and how to leverage those trends of what people are searching for, what consumers are buying, and identify product strategies that can boost your sales. We'll look at successful retailers and pricing strategies, analyze the sales data, and find out what retailers performed well at which price points. And then lastly, we'll look at trends to watch and practical methods for taking advantage of those trends to help you as an organization, whether you're a retailer or a brand, on the supply chain side, a vendor, CPG company, or even on the tech side, really stay ahead of the game by understanding some of the emerging trends and pricing data that we're seeing today. So with that, let's get started. We want to encourage everyone on the webinar today to ask questions. We want to make this interactive, so please use the Q&A function at the bottom of your screen to participate. We'll be fielding questions throughout the entire session. At the same time, we're going to be launching a poll. We can cue that up right now. And so we encourage everyone to participate, and we'll be sharing the results in a few slides from now. And I think it's fully live, so everyone should have that. And before we dive in, Jade, can you please give a background about Centric Pricing? We've known each other actually for several years now, coming from StyleSage. So a recent transition, but an exciting one. So would love to pass it over to you. Maybe give a little bit about that transition and then also Centric Pricing.
Sure, of course. Thank you, Steve. Well, first, it's really exciting to reconnect because I remember what you had mentioned was you actually wrote about us when we first came out in 2013, 14 or so. So really full circle, it's a small world. Well, first, I'm really excited to share that StyleSage has now joined the Centric software family as of October of last year. So it's been a really, really interesting 6 months, but also through their lens of understanding the Centric software, they offer an entire suite of business critical software for retailers, brands, and manufacturers. And really, the way to think about it is a platform from which we can take product concept all the way to launch. And the idea really is to create like a really seamless process and workflow so that our clients can really bring the right products at the right time, at the right price for their customers. And so the price piece is how we joined. Now, just a little bit about StyleSage, or now Centric Pricing specifically. We really started this company back in 2013 out of business school to really address that imbalance and asymmetry of information availability between consumers and industry, where actually, surprisingly, consumers had a lot more access to information about products, choices, and trends back then, so much more so than retailers themselves. And we wanted to create a way to collect that data at scale and really surface them in a way so that the industry can combine their years of veteran industry expertise with data-driven decisions. And today, as we talk to the slides, you'll see how those data can really encourage those really important strategic decisions and conversations within organizations.
That's great. And really coming full circle, I would say, and how you guys are plugging into Centric as a whole, I think is really exciting. And the synergies across the other offerings of Centric, and how that flows into product lifecycle management and manufacturing, because it often tends to start with price. So the first slide here, yeah. So this is a really impactful slide. Obviously, as many of you in the audience know, inflation is top of mind across all conversations and really impactful to not only retailer strategies when it comes to pricing and buying, but also how the shopper's mindset is and how they're thinking about purchasing items. In the most recent CPI, we saw inflation up about 5%, which is actually a positive decline from the highs we saw in 2022, but still above long-term historical average. So despite this positive downtrend we're seeing in 2023 so far, as you can see on the chart here, inflation is very much impacting the price of goods and is very much top of mind for the average shopper. Coresight did a recent survey that found 78% of consumers felt price gouging from retailers. So this is definitely something retailers should be paying close attention to in modern day retailing. And so pricing competitively and informing your strategy with consumers that are often comparing pricing is really, really important. So Jade, I want to ask you, do you think these price increases are in line with price increases from CPI trends? And what do you think is driving some of these high levels of pricing across certain categories?
So I think with fashion is a little bit different from some of the other, because consumer price index really includes everything, right? Including your groceries or your gasoline, all those things that you actually are necessity must-haves. Whereas clothing, there's a component that's must-have, there's also a component that's disposable and discretionary spending. So I think there's definitely, that's a really good guideline to look at the CPI, but also within the industry itself, there's going to be some unique behaviors that you'll see. So this graph, for example, we wanted to really pull together what was it like last year across different major fashion categories, what was, how the growth was in terms of price increases, and then going into this year, what that looked like. So you can see that based on the graph there, we actually made a vertical line to show you 2022 versus 2023. Now, while the prices are still rising a bit across the industry, and just before I actually go into that, we looked at close to 40 US-based retailers and brands, all the way from mass to higher end department stores. So this really is reflected across all price segments, maybe except for the ultra elite luxury. So this is really indicative of how the market generally in the US is moving for fashion. So from here, you can see that there's actually a bit of slowdown starting in 2023, where, handbags were 23%, right? Close to 24% increase last year, but now it's sort of slowing down to you only see about 3% in the first 3 quarters this year. So, this obviously we all probably know the folks on this call are likely all industry veterans themselves. So it's not surprising to know that the historic price increases have really been tethered to the rising cost of materials and labor, but also, on the higher end of the price spectrum, we actually dived a little bit deeper into the details that's not shown here on the slide. There are some brands actually that are taking opportunity of the moment to raise prices to maintain their luxury positioning, because luxury is just simply in a slightly different category in terms of price sensitivity. Now, back to your question on these particular categories that you mentioned here, one of the reasons could be that more and more companies are starting to require employees to return to the office, either part-time or full-time. So for example, just like last week in April or so, JP Morgan announced that all senior bankers will need to return to the office full-time. There's anticipation that it will shortly then phase in to apply to all staff as well. And they aren't unique in that requirement. That is one example, but this you'll see that across many business sectors it's happening. So with this requirement, coupled with the fact that the past couple of years people have really stocked up on home, leisure wear, it would stand to reason that consumers are now investing in those what I call outside clothes with company policy changes. So there's a number of different sort of societal changes that's really driving for those particular categories potentially higher price.
Yeah, no, that's a really interesting point you bring up, Jade. It's not just the inputs, the cost of goods, labor, materials, supply chain costs that are driving those individual price increases. If I understand, it's also what's happening with the consumer. Where are they purchasing? Where is there opportunity for retailers to think a little bit more strategically on where market share is moving, what consumers are doing? So it's both a look inward and outward, if I understand that.
No, absolutely, absolutely. And societal behavior changes are going to be a key driver on how consumers' purchasing behavior are changing, in addition to just the cost consideration. Those lifestyle changes really play a part.
No, that's good. And if we turn to this slide, what are shoppers looking for right now? So Centric pulled search volume in the US, really interesting data from March. And we can see the trending categories and how that compares to year over year. So based on this, we're seeing work from home categories. I guess unsurprisingly, you just brought up JP Morgan, downtrending, sneakers, sweatpants, leggings. Now, do you think this is a reflection of more people going into the office and dressing up, or is activewear more of an established staple category and it might just be slowing? Or are some of the, I guess, more dressier categories starting to include, we spoke about this, some elements of casualizations of comfort. So there's a bit to unpack here, and then I want to get into the Hoka New Balance conversation. But let's first start here on the conversation of work from home categories versus dresswear.
Wow. And so great question. Again, you're right, a lot to unpack there. Well, first, as we just mentioned just a few minutes ago, over the past few years, consumers really have stocked up under casual basics. I know I have. No, fast forward to now, people have a full wardrobe of leggings and sweats and such, and these products will be staples and they will be replenished as needed. So that it's not that people won't buy them anymore. It's just going to be at a slightly slower rate, and right now they're turning to categories that are underused in previous years. And that's not just workwear, that's also, travel and special occasion and the like. Most importantly, actually, just learning from the pandemic era of buying, one of the major, I think, behavior and preference changes is really a comfort trend. Comfort remains an important influence and factor in purchasing decisions across all fashion categories, even the ones that are a little bit more formal. And this may be a real opportunity for brands and retailers to consider comfort as a major part of that design process for, workwear or more formal wear, where, that type of thing is not necessarily always associated with that, and you see this across many categories. Like real examples we can point to are like, for example, intimates. There's a huge emphasis on having more comfortable bras that supports without sacrificing style, even though that's not something usually people would see out in open. And there's even, starting to extend into menswear as well, right? So for example, the 4-way stretch work pants, that was something that was not available to men really just even 5-6 years ago. That was something very, very, very rare, but you're seeing more about this. And what I'm assuming here is better fit and also better materials that are being used. Again, closer examination. What are those materials that would fit the human body better, but also provide comfort in addition to communicating what that piece of clothing for its occasion is for? So,
yeah, that's great. And I'm gonna throw a little bit of a curveball and add an audience question in here, relevant to your response. Do you think AI can help merchandisers, let's say if you're a big box retailer, Target, Walmart, understand these trends and select the right merchandising for their product allocation and selection?
Sure. So there's a bit to unpack there because there's different types of AI. So to talk about that a little bit, there is AI, artificial intelligence, that's meant for more like understanding information and products, and the ones that can actually predict and spit out things. So I'm assuming this question has a little bit of ChatGPT element embedded into it. Like, can I ask ChatGPT what's going to sell the best next year and build a merchandising plan for us, right? Honestly, that's a business idea. If I didn't sell this company and work with Centric now, maybe that's my next company, right? So I think there's definitely opportunity opportunities as that develop for generative AI to be a part of that process. And then there's also many other really interesting ways. So our company has a lot of AI embedded, but it's AI specific to what we call natural language processing as well as computer vision. So in those cases, the computer vision is really looking at an image of a product to understand the attribution. Now, understanding it at scale, then it really can drive up like, okay, well, within the market, there is a huge, majority of products that start to show this type of attribution. Now, depending on the identity of your business, you may want to choose to go with a trend, or you may want to deviate to differentiate, right? And that's an internal strategitic question that you can look at. So there's many different ways. And then other AI generative technologies that can come up with, let's say, design ideas. That's also something that, it's for the image generative AI, that's probably a potential way to use it as well. So the short answer is yes, but it depends on what kind of AI do you mean and how the AI is supposed to help. But then there's also definitely different types of AI to help with different parts of that process.
No, that's great. And let's be honest, we could probably have 3 more webinars on just that AI conversation. So we'll stick
next week.
I love it. And if we just stay on that slide for another minute, I want to point out an interesting trend that we saw in the Centric data. We saw sneakers declining in search volume all the way at the bottom right. And then we see Hoka and New Balance towards the top, over indexing. What do you think this data is telling us? And are we seeing kind of a transition to more, performance-based, or is there an opportunity for brands to differentiate in a category that might be declining, but we're seeing standouts here?
Sure. So I love that call out. So number one is sort of Hoka, Salomon, Merrell, New Balance, among a handful of other performance-based brands. They've really gotten a recent boost from the fashion crowd. So they've been really smart about tie-ups and innovations and collaborations with interesting influencers and celebrities and fashion brands. So then you're getting 2 kinds of audience. You're getting the ones where sort of like Gen Z have co-opted this chunky shoes, comfort trend that's both functional and part of a style, but also maybe the normal core crowd from before, prior to all of this celebrity uplifting, was that they were buying those shoes for that core component of comfort, and Hoka shoes tend to be wider, also so super comfortable to walk around in. But at the end of the day, the loyal customers that are not trend driven know that these are great products that are comfortable and great for workout and hiking, and then it's just an extra bonus that is now also fashionable. Now, I just want to address really quickly on the whole sneaker declining trend. It's not that the sales are shrinking. It's more that they are growing at a slower rate, right? Ceding some shares to other footwear categories and shoe types. And overall, that's a sign that the industry has a lot of competition and there's a certain stage of maturity. So to big brands like the Nikes and the Adidas and et cetera, they're going to have to work a little bit harder to keep ahead of these kinds of performance type players. But also lastly, as I mentioned before, comfort is a huge factor in the footwear category now. So for example, with heels, even though they have rebounded somewhat in terms of retailer assortment, we simply don't see as many consumers looking for heels online because there's just not as many occasions to wear them, as many people still work at home. And, just after pandemic, people are just like, no, I want to be comfortable. So those are all different factors that play into that.
That's a great answer. So if I understand, play that back, it's really about lifestyle brands, performance-based, that might be multifunctional as well. And I think that's a real takeaway for brands and retailers out there that are looking for opportunities to differentiate themselves and stay relevant in a category that's become very competitive.
Yeah, you are exactly right. The multifunctional is it's an operating keyword there because, especially if you think about it, salary has not been rising at the same rate as inflation. So your dollar suddenly purchases much less. So when people are making those purchasing decisions, if your product has multiple ROI, that's going to get picked over something that they're going to wear maybe once. So for example, heels that have comfort technology that can make it really easy or seamlessly transition from work to play, those types of multifunctional products are likely going to be something that consumers have preferences for, simply just because disposable income with this inflationary pressure is shrinking.
Yeah, no, that's a great call out. And personally, I'm still trying to understand the big and bulky trend, but maybe one day I will. So if we move to what are shoppers buying now? So in 2023, we've discussed this. We've seen pent up demand for dress wear, smart casual, even occasion-based apparel. We've seen kind of a revival in those categories. Based on the Centric data we're seeing here, it appears that the consumer still has an appetite for dressing up and traveling. What would be your takeaways from this slide? And do we think the dress wear trend is here to stay versus the casualization? I know we kind of touched on this, but let's just unpack some of the data here.
I mean, dress wear is always going to be here to stay, but I think dress wear is evolving based on how society behaviors and preferences and lifestyles are changing. So again, now people are now dreaming of, I can go on holiday, or I go on to a destination wedding where it's both a holiday and a special occasion and destination events. These are all things that people can finally do again. But I think there is a bit of change in behavior where you're buying something just to wear it once in that occasion. You want it to be able to be, multifunctional, maybe something that can transition from, I don't know, I'm just making this up. It could be, accessories that are also, weatherproof because you're wearing it in a tropical, climate because things that might rust, different ways that you can make products have multiple functional or transition from that special occasion and travel experience to also be reused somewhere else. There's going to be a real, I think, opportunity there because multifunctional, like you said, that is just something we see in the data where that's where the consumer demand sits now.
Got it. That's great. And I do want to flip to the next slide because I think the last two are really impactful in our presentation here. So discounts are driving inventory movement. No surprise there. It's something we've always seen in retail. But how are they impacting margins in high inflationary environments? About 30 to 40% apparel companies that we've seen that we track at Coresight, Under Armour, VF Corp, have reported margin pressure due to increased promotional activities in recent quarters. Let's face it, pricing is hard. You want to sell your inventory, get it off the shelf, but you don't want to over discount your items when you have them. Carter's recently reported that they've tried to reduce prices to clear inventory, but the effects weren't as strong and were impacting their margins as well, unsurprisingly. So Jade, you have a lot of experience here. What do you think the right strategy is that retailers should be thinking about? What's the right balance for pricing and promoting during this more difficult inflationary environment?
Great question. There's a lot to unpack. There's multiple questions because the reality is different segments have slightly different behaviors. So this is not a one size fit all answer. There's going to be some caveats because your different business and the brand loyalty you command, all of those things will come at a little bit at play with this. So number one is a general comment about the American consumer. The reality is that the American retail market has been played with discounts for a very long time. We have trained consumer behavior to expect it and want it and refuse to buy unless they really, 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 really want it. They wait for things to go on sale, right? So this affects particularly sort of that middle tier prices in the market, because once you get to luxury, you're targeting maybe a segment of consumers like, who cares about inflation? I got lots of money, right? Like that's sometimes that for a lot of the consumers who will buy into luxury, they may fit into that profile. So there's a little bit less price sensitivity there. But that middle tier often is sort of like in between that, people who tend to buy really price sensitive, that may be the tier up, the aspirational tier that they buy in. So you'll need to see a lot more discounts. And we see that compress a lot more in that middle price segment. And because of this trained behavior, it's been really difficult to pull back on the discounting. Now, with that said, There are some noticeable differences between how retailers can operate these strategies. So interestingly enough, because we've been looking at this data a lot, both for our clients and ourselves out of curiosity, for some of the more e-commerce and mass fashion players, they, because they have the luxury of not having that physical item in the store with the price tags attached, right? Because they don't have that. We actually seen some unique cases where some of them are actually increasing prices after introducing a product if it sells really well. Because there's a whole like, the industry accepted practice is like, oh, it's not selling well, so let's discount. But is there a practice and hey, it's selling really well, maybe we increase. So we're not seeing a ton of that, but we're seeing some unique behaviors and from a few choice players who do this. That's number one. Number two is for also a lot of the mass retailers, because they have a ton of SKUs. So the strategy generally for lower price retailers, not everybody, but mostly it's to go wide and shallow. So lots and lots of SKUs, but maybe not too much volume inventory. This means that you give a consumer lots of choices, you can offload things really fast, but also you're not betting too much on a single style because that's a fast moving price sensitive segment. We've actually seen that there's a little bit of an illusion of discounts that are happening here. So just to give you an example, like a typical mass retailer could have over 500,000 SKUs. As a consumer myself, I don't know the difference between them putting 40% of the products on sale versus 35% of the products on sale, right? Because I'm just not sitting there counting. So what we've seen is that while they've increased prices, they've decreased the discount penetration, which is the amount of products that are actually on sale. And then they also have decreased the level of discounts, with some of the choice items still have kind of previous level discounts. And this kind of creates an illusion for the customers, like, I'm still getting a deal. So there's very, very different discount strategies that we see that are employed across different segments and different types of players.
Yeah, definitely. It wouldn't be a one size fits all approach. And I think one of the questions I had was, how have you seen any trends or differences in Q1 and the start to Q2 on the discounting and promotion cadence versus last year?
So I think you can see, like, if you look at basically this graph here is looking all the way down to 2022, right? So just even in this comparison of March last year, I'm looking at the slide here, the difference really is huge. So if I can read this a little bit closer, back in March or so, the discounted products, average discount rate, like there's about 7% of products that were discounted. And now in March, you're actually seeing 30% of the products on average that are discounted. So there's definitely an overall increase, but this is also an aggregated stats looking across about 40 different US retailers across different price segments. So for sure, there's an increase there. You can see it very clearly from this graph. I think where it will be really interesting is when we deep dive, and we certainly welcome any retailers and brands who are curious to reach out to us to do a deep dive in a specific price segment to see for the middle tier, what does that look like? For the mass tier, what does that look like? And you'll probably see that a similar pattern, but at different levels, depending on your price segment.
Yeah, and I want to ask this question, but we might be a little early, but as our, as Deborah would say, we're never too early to ask this question. Any predictions for the holiday?
So I have some hypotheses based on what we're seeing here. For holiday, it's really going to depend on a lot of the state of the economy and the consumer confidence. We've seen the industry hold its own so far, right? From last holiday season into this year, even under sustained inflation. But discounts did, however, creep up at the end of last year under this duress. So this economic situation, I mean, we're all sort of like eagerly awaiting to understand, whether Feds will increase that rate again, because there's multiple impacts to that. When they do that, there is if they raise interest rate again, hopefully that will help stemmy the inflation impact, which means that maybe it will stemmy sort of prices there. But if they also raise again, that also the cost of capital is so much more expensive, and there might be really a liquidity crunch from investors to these brands. So there's not a single silver bullet that we can really predict here, but it's overall, how does everything shape up as economy and that consumer confidence as a result of all these multiple different factors? That's going to be really difficult to predict, simply because we thought they were going to stop raising rates, and then nope, they didn't raise it again. So I think the next anticipated announcement whether interest rates will rise or not, that's going to be a key component, especially going into holiday.
Yeah, no, I think there's a lot of uncertainty, unpredictability. And what we saw last season was, I think, a rush to clear products, clear inventory, and that led to some deep discounting. So maybe we can get it right on the forecasting of products, and that will help inform pricing and have, I guess, give retailers, merchandisers more power to really dictate it and have authority to price competitively, dynamically, versus, we got 30 days left. So quick question we had from the audience, is this Centric data global or just applied to the US?
For today, the slides are US only, because global we would do a 6-hour webinar, different key markets. But if there is any specific markets that folks are really interested in, we're certainly happy to take a look and have a conversation. But for today, it's all US based.
Great. So as we turn to our last content slide, which price points are relevant right now? We see 4 different trend lines broken out by average price here. Jade, you want to go through what we're seeing on this slide and tell us, what this means, and if the highest price items that are the highest sold out rates, are these representative of the luxury sector? It seems like the higher disposable, income consumer seems to be unbothered by economic headwinds and continue to buy higher priced luxury items.
Well, first, just to make sure that the audience is aligned on what this graph is showing, we broke it out by different $100 price points. So you can see on the color legend on the side, it's 0 to 100, then 100 to 200, so on and so forth. And what we looked at was what was selling out in those price points without discounts. So we were looking at all the products that were introduced after January 1st of this year, and without any discounts, what is the rate of products selling out by price point? So because that really shows you demand, like people willing to pay at a certain price without waiting for that discount, as we had just talked about in the previous slide of that trained behavior. So these are things that people really are willing to invest in, right? So in looking at this, it does seem like, and it sort of pairs with the observation before, that when you're in the higher segment, you're seeing actually really high sold out rates. So the higher disposable income folks seem less bothered by the economic headwinds. And this is probably not a surprising observation, but it's good to see that in data. It's like supporting the hypothesis and confirming that is correct. So the best brands know that they don't have to discount, and they have a highly desirable product and brand that consumers love. So this kind of begs a question for everyone to sort of retake a look at their brand DNA and how they're building products. What is that specific value proposition that your core audience is really important to them? Is it sustainability? Is it the quality of the goods? Is it made from made in a certain area that you really care about? Is it artisan? Is it fair trade? All these different ways that you can make sure your product resonates with your consumers, and those are going to be the products that really enjoy the higher margin because there's less discount needed.
Yeah, that's great. And I do want to be conscious of the time here and try to address some of the audience questions. Sure. So we had one come in. Could you speak to any successful implementations with specialty apparel retailers for Centric Pricing? I'm not sure if you're able to share that type of information.
Oh yeah, those are a little bit trickier just because we want to give away what the clients are doing. This is very confidential, to their business. But I will say that for a general view is that process matters and technology adoption, digital transformation matters. And that matters both from a micro perspective. We've seen teams do it successfully when the entire organization maybe is a little bit slower adopting those things. But the sooner you really take a re-examination of your week-to-week operational processes and where you can include discipline in bringing in data to help support a lot of those, veteran industry experience decisions, that's going to be where you drive the highest point of return, because it's the data alone can't make decisions for you. Humans alone cannot make decisions at scale for those types of global multi-million-dollar impacts. But when you take that expertise and pair it with data, that's when you can be a little bit more confident in how you're backing. We should order this amount of inventory. We should price it along here, but also look at how do you create more agile processes to react in season. So the process part is actually the key part of all of this before anything else can happen. And we actually surprisingly do a lot of work with clients of looking at their process and how to insert those data points in, rather than here's the data things can completely transform everything you do and look nothing like what you were doing before. It has to be a partnership. And so that's how the really successful specialty retailers are able to respond to the market, is by actually looking at agile processes and how to include those in those new processes.
That's great. And if we stay thinking about by sector, we had a question that came in. How do you think about pricing for fast casual, a Zara type company? Does that strategy look a lot different?
Oh, I mean, for sure, because by nature, fast fashion has a lot more SKUs. Right. And so there's, and also it's much more price sensitive. So a pricing strategy, I mean, imagine to say like H&M and Chanel will have the same pricing strategy. Both of them will just roll over and die. Both brands will be like, what? No. So 100%, yes, there's absolutely correct. But I think with fast fashion, because of the agility and the fast turnover, they actually learn a lot faster than maybe some of the brands that take a more traditional seasonal approach. Like we have 2 collections a year, we have 4 collections a year. And that is also a valid strategy. And especially in luxury, you can maintain that. But in fast fashion, that fast pace means that you can get rid of stuff fast and move in new ones to test what the consumer appetite is before you push out a larger, inventory around a specific style before you commit to those numbers. So I think for fast fashion, really their advantage is being wide and shallow and being able to test that, but also a lot of them have invested in super nimble supply chains because they've had to for the turnaround pace, and that's where their advantage really comes from.
Yeah, no, I definitely agree. And just to wrap things up, I want to share the poll results. If we can put those up on the screen. And Jade, if anything stands out to you that might be surprising, feel free to jump in as I go through them. Are we able to get those on the screen? So our first question, which of the following are most important to your business? The top most answered response is loyalty and delivering customer value. Second was improving profitability and efficiency. And then third, reducing inventory levels. Our second question, how did your company handle rising prices during inflationary environment, and how has that impacted your business? The top answer was we raised prices and that helped improve profitability. So I guess not too surprising there. The second response was we raised prices and they impacted the business neither positively nor negatively. Lastly, does your team rely on spreadsheets for your merchandising and pricing and planning decisions? So positively, we found 70% of the respondents said we use analytical or technology tools to help with our merchandising, pricing, and planning decisions. That is encouraging there.
This was definitely not the case in 2013 when we first came out. No, this is so encouraging. This makes me really happy to hear.
100%. And then one more question. What's your company's biggest obstacle to success in the year ahead? And the top answer, 40%, navigating a potential economic downturn. I think we can all probably agree and relate to that one. The second is getting reluctant shoppers to spend more money.
I think this is all very much on point and on theme with thinking about, providing multiple value of a piece of clothing or a handbag or a shoe, delivering kind of multifunctional and occasional value in different scenarios for the consumers is likely going to have an impact in whether someone decides to spend that or not, because they just have less to spend. Not only have less to spend, but also the money is worth less because of inflation. So that's a really key point to think about. How can you drive better value rather than just, this is a basic t-shirt, but basic t-shirt, why? Stain resistant? Is it sustainable? Does it have natural fabrics that helps you breathe? There are different ways to make sure that there is multiple ROI for the customer.
Yeah. No, agreed. And I think over the rest of Q2, Q3, Q4, we have a lot of interesting trends that we're going to be monitoring, and how the macro and consumer environment impacts retailer strategies is something that we plan to discuss in our research and hopefully with you at Centric and the whole team there. So Jade, I want to thank you so much for joining us today. For everyone in the audience, we'll be publishing and sharing these slides and the recording via email and on Coresight.com. If you have any further questions or want to get in contact with Jade, her email is in the slides, and we'll also be sharing it in our follow-up thank you email. So thank you, everyone. Again, thank you, Jade, for your time and amazing insights.
Thank you for having me.
Great. Take care.